at the present time, it is possible that liquidity is somewhat tightening because in general, people believe, and economists will tell you, liquidity drives markets. In other words, it drives up bitcoins and it drives up micron technology and whatever. But it is also possible, or probably likely, that when asset markets decline, that liquidity tightens. I mean, we've seen now two major asset classes that have declined meaningfully in price in the last few years. And this is commercial properties. Commercial properties, I just read of a company, they sold their property portfolio or holding in Seattle for half, actually less than half of what they paid in 2018. And that has tightened liquidity for some people who were large holder of real estate in a leveraged way. And then we have the decline in cryptocurrencies that has surprised many people because they were all betting on Bitcoin and everything going up. And now these cryptos in some cases are down 70-80% from the peak. So that has tightened liquidity for Generation Z because the cryptos were bought like crazy by young people who didn't want to own any gold, silver, and platinum. They wanted something that moves more than the traditional safe assets such as precious metals. And that has tightened liquidity of young people. And more recently, over the last, say, 18 months, residential property prices have gone down, especially condo prices. And a lot of not wealthy people, but middle-class people were long condos, partly to have a second home in Miami or so, but also partly as an investment. And so I think that liquidity is sort of tightening, and it will be interesting to see today, as an example, the Dow is up strongly, but the 6 most active stocks are all down on the day because they're technology related. And the SOX index is down about 3%, whereas the Dow Jones is up strongly. So we have changes in the composition of assets that are meaningful. I like precious metals for the simple reason that I'm not so smart to choose the right thing at the right time every year or every half year. I like precious metals because I think that in the current environment, especially if I look at the Trump administration, I want to have something relatively safe and that is thriving and keep its value in an environment where the government will spend money like water. They're not going to reduce the deficit. The deficit will go up. And since the interest payments on the debt will therefore also go up, more money printing is only a question of time. Personally, I hope that gold falls another $500 to $1,000 an ounce, because then I would increase my gold position again rather substantially. I have a substantial position already, more than most people would have, except the gold bugs like Eric Sprott. He has most of his assets are in gold, or some other people I know, they have most of their assets in gold. But most people that I know in the investment world, say among fund managers, most fund managers do not have more than 1% in gold, and already a 5% involvement in gold is a lot. I know rich people in Switzerland, they have most of their assets in real estate, in some stock portfolio, in some bond portfolio, private equity, and gold maybe, a few ounces, which they inherited from their grandmother, which bought them during World War II. If the mad world collapses and we have a major financial bust, then also what is relatively low will go down. Yeah. I mean, whatever you consider, at the end, I think that in a major bust, gold and silver and platinum will go down also, but they will go down by maybe 30%, and many other things will go down to zero, and many other things will go down 98%. Say all stocks related to the Trump family will go to zero. That is my prediction. When I started to work in 1970, gold was $35 an ounce, and now it's 4,500 whatnot. I mean, it's performed well over the long term, and it's performed very well over the last 12 months, 18 months, and there's no excessive speculation. The inflows into ETFs have just recently picked up, but then with the correction, they've again sold. I mean, considering the performance of gold, silver, and platinum over the last 18 months, there has been remarkably little speculation. I go out to bars at night and people play pool, and they have people that are involved in sports betting and all sorts of investment schemes that are scams or dubious. I tell you, you hardly ever hear of anyone buying or selling gold. Hardly ever. They buy and they're all active in Bitcoins and in Solana and whatnot. But gold and silver and platinum, I tell you, of all the people I know, only maybe 5 are active in precious metal.
Interesting.
I'm not particularly active because I just hold gold, period. I don't sell gold. I've sold some of my gold shares because they had huge run-ups, and I'm of two minds about gold shares. I think if you want to make money, you can make money, a lot of money in gold shares if you buy them at the right time. But I think the mining stocks are quite inexpensive relative to everything else. But I personally prefer physical. Under my mattress. And I have South African gold mines, and I have Canadians.
Yeah.
And because I was a director of Ivanhoe, I have still a fairly large position in Ivanhoe. Is not one of my favorite stocks right now, and I have a preference for platinum as a commodity because it's very cheap relative to gold and silver, and silver is relatively cheap compared to gold. But wheat, corn, soybean is even lower relative to gold and everything else. And oil, since you talked about energy, or we talked about energy before, oil is low compared to gold. I mean, you can establish ratios. 1 ounce of gold, how many buildings does it buy? Or how many ounces of gold do you need to buy a building? I mean, a house. And how many ounces of gold do you need to buy a bushel of wheat? And how many ounces of gold do you need to buy silver? And so forth. And so you can establish what is relatively low compared to gold. And I can tell you what is relatively low compared to gold is your work, is a labor cost. And what is relatively low compared to gold are food prices. I mean, wheat, corn, soybeans, sugar, and yes, that. And I mean, it depends on the person because he may have large real estate assets and he may be diversified and so forth. But I would suggest to hold about 25% of his assets in gold. And some of my friends, they own 80% of the money in gold. I think it's very courageous because one feature of gold is that it doesn't really yield. It doesn't provide you with a regular income. I have a bond portfolio as well.
Yeah.
And as you say, in the last few years, it hasn't been doing well, but not as badly as, say, a 30-year bond. When you look at the 30-year bond, its price from the peak in 2020 has almost been cut in half. But you had the dividend. I mean, you had the interest payments every year. So the total return hasn't been that bad. And in the last 2 years, I just checked, the return hasn't been negative because the 30 years has gone down a little, but you got the 4% interest. I think equities survive any war better than bonds. I mean, if you look at German industry, you look at the 10 largest companies in Germany in 1900, Bayer, BASF, and so forth, and later Mercedes. All of them, they survived World War One and World War Two and exist nowadays. As a stockholder, you still have something. If you invested in bank deposits, you have nothing, nothing at all, three times nothing. Same in Russia, China. So I think that in equities, you'll be better off. But the perfect asset in those conditions are holding gold coins. But I want to point out one thing about holding gold. You know, one of the leading philosophers of the 20th century was Wittenberg, and he studied actually with Bertrand Russell at Oxford. And anyway, Wittgenstein, his family was one of the most affluent families in Europe at the time, and they owned, I think, about 250 tons of gold in Switzerland in a vault. And when Hitler came to power, they found out that the Wittgensteins, they were Austrians, but they had Jewish blood. So Hitler went to the family and said, okay, you want to stay in Austria, you want to keep your steel empire, you hand over the gold to us. You don't hand over the gold to us, we